Okay, so I made $30,000 in 1 week from day trading, which actually used to be my yearly salary about 5 or 6 years ago, because 30,000 US dollars turns out to be around 45,000 Australian dollars. And back in 2018, 2019, I was making 40,000 Australian dollars in a year from my full-time job. In this video, I will walk you guys through all my trades for the week, the mistakes I made, because I made quite a few mistakes, my risk management, and how 80% of your profits for the year will come from 20% of the trades. Because in the long run, the small wins and the small losses will nullify each other, but the big wins on the playbook setups are the trades that will help you drive your equity curve towards the upside. Okay guys, so on Monday, that was 22nd of Jan, my two trades that I took were on SMCI. So SMCI on Friday last week had a crazy push towards the upside. On Monday, I was watching this stock for a continuation play towards the upside, and that's what I mentioned in the Discord group. You guys can see on 22nd of Jan, SMCI intraday momentum play. So I was personally watching the yesterday's high or the prior day close for the hold of these levels for a push towards the upside. Let's now take a look at the intraday chart and look at my entries and exits. Here's the 1 minute chart of SMCI from 22nd of Jan 2024. You guys can see on the first candle, we had a small red candle right here. On the next minute, we held this $450 level, which is a good psychological level because this stock made a new all-time high on Friday. So when a stock is at all-time high, all these levels like 450, 460, 470, 500, all these psychological levels are very important levels. On the first minute, we held 450. On the second minute, when we broke this 1 minute high, I entered my position right here. I only took 5 contracts at a fill price of 8.49. So my investment was less than $5,000 on this trade. I took 2 contracts out right here. I added to my position on this candle, but when we failed to break this flag towards the upside, I covered my whole position on this red candle, overall making $3,500 on this day. Let's now take a look at my stats for this trade. You guys can see that I entered 5 contracts right here. Average fill price was 8.49. Yes, I made $3,800, but how much money did I actually risk? You guys can see that my stop loss was $7.0 on the premiums. This is the worst case scenario because if you guys look at the chart of the premiums never even went to under $7.5. So worst case scenario, I would have exited at 7.0, but to be honest, my risk should have been like 7.3 or something like that. My risk on this trade was around $600. I made $3,800, which is a 6.5 hour risk to reward trade, which is a really good trade overall. And my second trade on SMCI, which is the ad I took on SMCI, my addition was on this pullback. So on this pullback, I entered my position. My average entry was 10.88, and I was honestly willing to risk $500 on this trade because SMCI, the premiums are very spready. But when we failed this 465 support right here, I covered my position, only losing $290. So that means I lost less than 1 hour. So my risk was $500, but because my executions were really good, I lost $290 on this trade, and I made around $3,800 on the prior trade, overall ending the day with $3,500 in the green. Now coming to 23rd of Jan, that was a Tuesday, our whole community was watching RTX. You guys can see RTX ER play looking for hold of 88.7 zone for upside, got a huge gap above. So we had a gap on the 1 day chart on this stock right here. So here's the 1 day chart of this stock. We can see that we are making a bull flag on the 1 day chart. The weekly chart looks amazing. The monthly chart looks amazing. We were gapping up above a major resistance right here on the stock after the earnings. So I like these kind of gap ups for a breakout towards the upside. The resistance can now turn into support. So my plan was if we hold 88 to 88.7 zone, I want to take it for a push towards the upside. Let's now take a look at the 1 minute chart and look at my entries and exits. Here's a 1 minute chart of this stock. Similar to my prior trade, the prior day I took on SMCI, I waited for the first candle. On the second candle, when we were about to break this 88.5, that is the zone I was watching, 88.7, I entered my position right here. I covered my whole position right here, making $8,600 on this trade. This was a really easy trade. Yes, I could have made around $13,000 to $14,000 or $15,000 on this trade, but that's not the point. I had a really good entry. I had a really good exit. Let's now take a look at the stats of this trade. By the way, the journal app I use is called Tradezilla. If you guys want to try it out, you guys can get a good deal from the link in the description box below. So similar to my last trade, I waited for the first 1 minute. On the second minute at 9:31 a.m. candle, I executed. I entered this position. The premiums were really cheap on the stock. I think I went for 90 calls. I went for 90 calls. I traded 100 contracts. My average entry was 0.57. The lowest premiums went to was like 0.42. That was the lowest, but my stop loss would have been like 0.45 on 100 contracts. My risk was $1,200, and I made how much? $8,600. So that is again 7 hour. And you guys can see the theme here. Yes, I made 8.6K, but how much was my risk, because risk is very important. Overall, I made 150% of my position on this trade, which is crazy, 150%. Because at the end of the day, yes, I made $8,000, but if I made $8,000 by risking $8,000, that is a bad trade. It doesn't matter how much money you lost or made on that trade, but how much money you were risking, how much money you actually lost, or how much money you actually made. That is very important. Now coming to 24th of Jan, that was a Wednesday. On this day, I messed up on my executions. You guys can see here that Netflix reported earnings on Tuesday after market close. I was watching the stock for a push towards the upside on Wednesday. ER name with a huge gap up. We'll wait for intraday price action, ideally a hold of VWAP for 550 push towards the upside. Now let's take a look at the chart of Netflix. So we can see that after the earnings, we gapped up. We were kind of making this bull pennant right here. We gapped up towards the upside. We can see right here, the only level we had was around 544, and we had this 535, which is a good psychological level as well on this stock. I honestly messed up on this trade because this trade could have easily made me $30,000, which is the wrong way to look at this trade. I'm going to explain shortly, but I sized up on this trade. My risk management was not really good on this trade because you guys can see on Monday, Tuesday, I was investing around $8,000, $10,000, $5,000 to make good amount of money. On this trade, I invested $30,000, which is my mistake. My risk management was not on point. And because my risk management was not really good, it messed up with my execution. So let's take a look at TradeZilla. Let's go to the next day. After RTX, we had Netflix the next day. I lost $3,200 on this trade, which is actually a good exit. Let me explain why. First of all, I invested close to around $30,000 on this trade, which is wrong. Like I was investing $8,000 to $10,000. So I had no reason to size up that much on a Wednesday, because if this trade would have gone against me, I could have lost majority of my profits for the week. So that is the number one point. My risk was really bad. Second thing is that after the earnings, I entered this stock on the second minute, knowing that the IV of this stock is really high. The spreads were really wide on the option chart. So you guys can see my fill price was 5.75. That is my average entry. The premiums went to 4.5. So if I would have exited my position at 4.5, I would have lost around $6,000 to $7,000 on this trade. You guys can see if my stop loss should have been 4.5. So stop loss is nice. Entry is nice, exit is nice, but the only thing wrong with this trade is my contract size, 50 contracts. I was risking $6,000 to make $30,000, but because I was not willing to risk $6,000, I covered this position. As soon as I saw that the premiums are coming back to my entry point approximately, I was willing to risk $2,000 to $3,000 on this trade. My brain was like, okay, cover the position. On the other hand, majority of traders will look at this trade and they will be like, I should have held this position. This was a $30,000 trade. And for me, if I can't risk $6,000, this was not a $30,000 trade. On the other hand, I should have taken 20 contracts, risking around $2,000, and the R would have been the same. So I would have made $10,000 by risking $2,000. That would have been a really good trade, and that is the review you need to take from these trades. Because yes, you could have made $30,000, but were you willing to risk $6,000? If the answer is no, you can't make $30,000. Were you willing to risk $2,000? Yes, then you could have made $10,000. And after this trade, I took a small loss on ASML. So I was just done with the day because I know like I had huge FOMO on that stock, Netflix. ASML was another earnings name. I entered my position right here, covered my position right here, losing $265. So overall on this day, I was down 3,500, 3.5K. So I made 3.5K approximately on Monday. Wednesday, I lost 3.5K. Now coming to 25th of Jan, I was watching Tesla and IBM as the two main stocks because Tesla reported earnings on Wednesday after market close. So Tesla is an ER name. Ideally want a push, small push towards 193, 195, and then a rejection for downside. If we hold strong above VWAP, we'll look for upside. IBM, we got a few weekly levels near 185, looking for a hold above it for upside push towards 190. So these were the two stocks I was mainly watching for the day. But my mistake was I traded Tesla instead of IBM. And that is an emotional issue because Tesla is a stock that I like to trade often. Tesla is a stock that I know the personality of, right? But IBM was a much better setup. I showed you guys the Netflix setup. I showed you guys the RTX setup. IBM was similar. It was gapping up above a major level. If we go back, we can see that we have around 185, 186 zone right here. We were gapping up. So these gap and go setups in this market are working out nicely. This was a similar setup. If you guys look at the 1 minute chart again, it's crazy how similar these setups are. If you enter on the second minute right here, we had the similar price action, same price action on SMCI on Monday, Tuesday on RTX, Wednesday Netflix, Thursday IBM. Same kind of setup. If you enter your position right here, you easily make 200% of your investment on this trade. But because I was emotionally attached with Tesla, I traded Tesla and I lost quite a bit of money on it. Then I made money on it. Overall, I made like $700 on this trade. I won't explain all the trades on this stock, but I will show you guys the entries and exits. But you guys can see right here, like the 5 minutes price action for the first 30 minutes was very, very wiki. And that's how I was making $1,000, I was losing $1,000. I was making 1,500, I was losing 1,500. So if I go in my daily journal, Thursday, 25th of Jan, you guys can see 4 trades on Tesla. I lost $200, 0.15 hour. I made $2,600, 1.35 hour. I lost 1.7K, 1.74 hour. The premiums went 30% against me. This was a really bad exit, and also the premiums were very volatile on a Thursday after earnings. Last trade on Tesla, I lost 1.17 hours. Overall, I made $800 on this day, but I could have easily made $5,000 or $10,000 on this day if I would have traded IBM instead of Tesla. But because I am too emotionally attached with Tesla, I know the price action of this stock, yada, yada, yada. Even though the setup was not really good, I still decided to trade this stock instead of IBM. And the setup was not good because this stock was already very extended towards the downside. So if a stock is very extended towards the downside, you guys can see for the past 3 weeks, this stock has been selling off, followed by a gap down after the earnings. So I knew that the price action is going to be very wicky and washy on this stock, but I still decided to trade it because of my emotions. Now, finally, on 26th of Jan, because I made a mistake on Wednesday, exiting my position early on Netflix, on Tesla, I messed up again. I did not trade IBM. So Wednesday and Thursday, I messed up. I did not trade really well on Wednesday and Thursday. And that's what I said. Your small wins and small losses will compensate for each other. So I am now sticking on to my Tuesday big trade on RTX, and I was still up around $9,000 for the week. And now 26th of Jan, I'm going to show you guys one setup, AXP. On Friday, you guys can see similar setup. On Monday, we had what? SMCI. Tuesday, RTX. Wednesday, Netflix. Thursday, IBM. Friday, AXP. All similar kind of setup. All same gap and go setup after the earnings, because this is a bull market. We are seeing the same kind of setup repeating itself. So on AXP, you guys can see on the daily chart, clear entry, clear exit. It actually made a new all-time high. I was not expecting that because the ATR of this stock was around $3. It has increased now because of the way we moved on Friday last week. But the ATR was around $3, 2.5 or $3. I was not expecting this stock to move $12.5 for the day. But you guys can see on the 1 minute chart, this is the same price action, guys. You wait for the first 1 minute. On the second minute, you enter your position with the stop loss under the low of the first minute, and you catch this push towards the upside. And on this day, I made $19,000. You guys can see on my TradeZilla right here, only one trade, 172% return on investment. My risk was a bit high on this trade. I was still up $9,000 for the week, so I could risk $3,000 on a setup like this because this is a playbook setup. This setup has been working out repeatedly in this market in this earnings season. So you guys can see on the second minute, I entered my position. My average entry was 1.11. My average exit was 3.07. My risk was 0.8. So I was willing to risk $3,000 on this trade. And you guys can see on this day, I accepted the risk. I was like, okay, this is a really good trade. I'm willing to risk $3,000 on this trade. Worst case scenario, even if I lose $3,000, I'm still up $6,000 for the week. Good. A good week overall. So my risk was $3,000 on this trade, and I made $19,000 on this trade on 100 contracts. Overall, 172% return on investment. A crazy trade overall. But one more thing, guys. Had I held this position for maybe 5 more minutes, the premiums went from $1 to a high of around $7. So in my head, I'm like, okay, this was a $60,000 trade overall. If I would have entered at the bottom and caught the top of this stock, which is never the case. I'm not trying to catch the bottom or top of the market, but according to my playbook, if I see a playbook setup like this one, I should hold my position until it makes a new 5 minutes low. So if we go on the 5 minute chart, I had no reason to exit this position based on the technicals. So I honestly traded my PNL. My exit should have been right here. And I could have easily made around $50,000 or $60,000 on this trade if I would have held my position until my exit criteria. That is a new 5 minutes low. So that is something I need to improve upon, because anytime I make more than 100% of my investment, I get a bit too anxious. I get like, okay, Ansi, I need to take my profits, which is something I need to work upon. I'm working on it every single day. I used to take my profits really, really early. And now these days I'm still holding for 5 or 6 minutes, 7 minutes, maybe sometimes 10 minutes, sometimes even 15 minutes. So I'm improving myself as a trader every single day. This is something I need to work upon, because on this day I traded my PNL, not the chart. Because if I would have traded the chart, I had no reason to exit, maybe until this candle, something like that. So I traded my PNL, not the chart. Overall, still a really good trade. The risk to reward makes sense. But this is the learning. This is the review you need to give yourself on your winning trades, on your losing trades, so that you can improve yourself as a trader overall. Overall, for the week on Monday and Wednesday, you guys can see minus 3.5K plus 3.5K compensated for each other. On Tuesday, I made 8.6K. Thursday, $800. Not the best day, not the worst day, just the wrong stock selection. On Friday, I made 19.4K. So this is how you stack up, right? So on Tuesday, it was a playbook setup. On Friday, it was a playbook setup. So these big wins will contribute to 80% of your profits for the year. And the small wins and the small losses will compensate for each other. And to be honest, we had a playbook setup every single day this week. I was just not a part of the playbook setups every single day, which is part and parcel of the game. You can't catch each and every move in the stock market, but it's how you perform on the days you catch these moves is what will decide if you're consistent or not as a day trader. That's it, guys. If you like this video, give this video a thumbs up. If you guys are new, subscribe to my channel for a lot more content on day trading. And if you guys don't follow me on Instagram, I keep posting a lot of day trading updates on Instagram as well. The link will be in the description box below. Give this video a thumbs up before you go. Thank you for watching, and I will see you guys in the next video.